Okay.
Yes, we're live now.
Great. Thank you. So hello, I'm Gwen Whistler. I'm the chair of the Finance and Human Resources Committee and a member of the Audit Committee for the City of Asheville. And I'd like to welcome you to our December 7th special meeting of the Finance and Human Resources Committee and the Audit Committee. All council members and staff and council members, committee members, and staff are participating virtually. We appreciate your patience as we continue to work through holding these committee meetings a bit differently. To help our audience follow along, I'll state each section of the agenda aloud. We're streaming live on our virtual engagement hub, which is accessible through the virtual engagement hub link on the front page of the city website. We also have an option for the public to listen live by phone. For those of you out there with us today, welcome. For today's meeting, we have the option for people to call in and comment live during the meeting. To call in and comment live, use the same number, 855-925-2801, meeting code 5257. Your phone will be muted and you will hear the meeting live. At this point, speakers will need to push *3 to enter the speaker queue. So I'm going to go through now and introduce the committee members and staff and the audit committee. And I'm just going to ask you to say a quick hello when I introduce you. And then when you're done speaking, if you'd remember to mute your phone, it'll make it easier. So as I call your name, if you just say a quick hello, Councilwoman Sandra Kilgore.
Good afternoon, everyone.
Councilwoman Sage Turner.
Good afternoon.
City Manager Deborah Campbell.
Good afternoon.
Finance Director Tony McDowell.
Good afternoon, everybody.
Assistant Finance Director Becky King.
Good afternoon.
Great. And our audit committee members, our chair Scott Powell.
Good afternoon.
Susan Hutchinson.
Good afternoon.
And Andrew Emery.
Good afternoon.
Amy Kemp wasn't able to join the call today. So we're going to go ahead and start the agenda. I will be calling out where we are in the agenda to allow people to follow along a little more closely. So our first item is the fiscal 2021 audit presentation. And I'm going to go ahead and turn it to our guest, Robbie Bittner with PB Mars. Mayers? Is it Mayers?
It's PB Mayers. Yes.
I apologize.
No problem at all. Thank you, Madam Chair. Again, thank you for the introduction. My name is Robbie Bittner. I'm the audit engagement partner for the State of Asheville's annual audit. Happy to be here, and to start off, I just want to say thank you to both the committee and staff for allowing us to continue to serve the city. We certainly do appreciate it, and we enjoy working with everyone here. Tony and Becky have really done a fantastic job this year in improvements. And as you can see, we are here in December presenting and not in March. So definitely have seen a lot of improvements there. So with that, I believe we have a presentation. Tony, am I sharing mine, or have you got someone pulling that up at this point? There it goes.
Yeah, Alicia's going to bring it up, and just when you're ready to go through the slides, you can just say next slide.
Certainly. So you can go ahead and go to the next slide, please. We're just going to brief agenda, kind of talk about the financial results. This year, you'll see that it's now called the Annual Comprehensive Financial Report. We'll go through our opinion, and then some of the comparative results to other like-sized cities in the state of North Carolina. Then we'll go through some of our compliance results. I will say at this time, we have not completed our audit in accordance with the Uniform Guidance in the State Single Audit Act, and that's due to a delay with the Office of Management and Budget. And then the last thing that we're going to do, something new this year, is go through what are called the performance indicators of concern as defined by the Local Government Commission in North Carolina. here, these are items and benchmarking areas where if you fall below a certain threshold, according to the LGC, it requires a formal presentation or a formal letter from the governing city council to the LGC in response to these performance indicators that may have tripped. So with that, we'll move on to kind of the key takeaways. If you'll go to the next slide for me. This year, the financial statements were uploaded to the LGC on December 1st, which is their deadline. So you have met the LGC's financial reporting deadlines. We had an unmodified or clean opinion, which is the highest level of assurance we can provide as auditors. We did have one material weakness in internal control. It's very similar to the one provided that was communicated last year. However, I say it's similar in that it's some year-end items. However, it was much less severe than what some of the areas that we had concern with last year. And then again, our uniform guidance audit is not complete at this time. Happy to say though, the ARPA supplement for what we've been waiting on was released yesterday. So we are now in the process of evaluating our testing, what our testing techniques and our plan of attack is going to be there as a firm. And then we'll begin bugging Becky and Tony for more information as it relates to those grants. So with that, we'll move right on into sort of the components of the annual comprehensive financial report. And let me stop here. If anyone has any questions during the course, anytime, please feel free to stop me. I believe there's a hand raising tool on this, and I will do my best to try to follow it. If not, Tony, can I put you on standby to be monitoring that for me? So thank you very much. So just kicking off here with the annual comprehensive financial report. As you know, it's quite a robust document. I have a printed copy here, just under 100 pages, double-sided. So not a very short document, but it starts off with a transmittal letter and some just a communication from the management of the city to the constituents and to the citizens. It goes into the first financial portion that we really pay attention to is the management's discussion and analysis. While this is an unaudited section, it does give you a high-level comparison year over year from your major components and in your major funds, such as how your net position moved from year to year, how your general fund and other major funds compared from year over year or compared to budget. From there, you go to your government-wide financial statements, which is at your most aggregate level of financial statements. And then after which falls into the fund statement, starting to break it down typically by your major funds and then your aggregate non-major funds. Then you move into the notes, which is really I would say the meat and potatoes of what's in the financial statements and providing you the most detailed information. After which you have what's called RSI, or required supplemental information. This is items that are required to be presented in relation to other post-employment benefits and the local government employees retirement system, as well as the law enforcement officers special separation analysis, special separation allowance. And this just provides 10 years worth of trend information. Well, 10 years once it's available. In accordance with GASB's 67, 68, 73, 74, and 75. That's a mouthful. With that, you go to the other supplemental information. This is really where you get to the breakdown of your budget to actual by fund at the non-major fund level. Then you go into statistical data. Statistical data is another unaudited section of the financial statements, along with the MD&A and the RSI. This is 10-year trends. There's a lot of population analysis, largest customers, that sort of thing, largest taxpayers, I should say. And then the last section that we would go into is the compliance section, which I'll say this year in your printed PDF, or excuse me, not printed PDF, but your PDF document that you have, the compliance section is a little bit shorter this year because it does not have that uniform guidance piece in there. but that will be issued as a separate reporting package, which will come to you as soon as we can get everything wrapped up there as it relates to the ARPA funds. So from there, we'll move on to the next slide, if you can, please. And as I mentioned earlier, the city did earn a clean or unmodified opinion, which is the highest level of assurance that we can provide as external auditors. The other types of opinions we can provide are the adverse opinion. We can disclaim an opinion or issue the qualified opinion. And those kind of go in order of severity. Adverse is basically where we're saying we don't think that your financial statements are presented in accordance with generally accepted accounting principles or GAAP. We can disclaim, which would indicate that we did not see enough information to render an opinion. We issue that qualified opinion, which is really a but-for opinion, where we believe that everything is fairly stated except for or but for one or two other sections. And then that unmodified or clean opinion is where we do believe that your financial statements are fairly presented in accordance with generally accepted accounting principles. So from here, we'll move on to sort of some breakdown of some of the financial results. And just looking at your general fund as a whole and what your general fund revenues are, something's not coming through properly right there. It's supposed to be in a list of percentages, but in any case, we'll go through that with that. So 53%, or the number that is showing at $73 million there, is 53% is your ad valorem taxes, which is your highest source of revenue. The $32 million, or excuse me, not 32 million, the $32 million number that's in red is 23.3% of your general fund revenues, and that's really made up of other taxes, other things such as occupancy tax, sales tax, and that sort of thing. Moving from there, we'll go to the next slide, just sort of show some trends for those. As you can see, the trend is that ad valorem tax line is continuing to increase. And the overall just breakdown of revenues really is staying about the same year over year. Moving to the next slide, you'll see that while your ad valorem taxes are increasing, something has gone funky with this presentation. I'm not really sure what's happened here, Tony, but in any case, there's supposed to be another slide here showing
on the website, it's okay.
I think what's happening is, Alicia, you may be displaying it in Google Slides, and since it's a PowerPoint document that Robbie sent us, it may be showing kind of weird if we were displaying in Google. If there's any way we could bring up the PDF instead of the Google Slides, that might help.
Yeah, I can do that. Just 1 second. Sorry.
Okay. Sorry about that, you all.
Sorry about that. I was like, something is really off.
Everything, all the presentations and everything we do here at the city, we do in Google. But occasionally, some of our external consultants use PowerPoint. And when you try and bring the two together, sometimes you end up with situations like we have right now. So if we can take just a moment, I think, and get it switched out, I think we'll be okay. Sorry about that.
That's all right. Well, while she's bringing that up, what I was going to say is that your ad valorem tax revenues are increasing. However, your tax rate is not. So that just means it goes to show that how the city is growing and property values in the area are growing. So that was kind of where I was moving there. There we go. That's a little bit better. I'm not sure what the one item is, but at least you're seeing the appropriate percentages.
But actually, Robbie, would it be too much of a pain if we switched and let you display it from your computer?
I probably can do that if I'm given permission to share. I certainly will be glad to do that. Let's see. are you, let's see. How is that coming through? Okay.
Perfect. Thank you.
Sounds good. So, as I was saying, your tax rate hasn't increased year over year. And then really, compared to similar sized cities, your tax rate is still lower than your similar sized cities, which, just to clarify, your similar sized cities are cities greater than 50,000 in population that do not have an electric system. And that's really related to that payment in lieu of taxes item that comes into play with your cities that have the electric system, since your electric providers are usually one of your higher taxpayers, since they own so much property, and not just property and easements, but also just the infrastructure that they have throughout the area. So with that, you'll also see that your tax rate falls in very closely with a statewide. And to also clarify, the comparative numbers are as of June 30th, 2020. This information is usually released in the March to April timeframe by the LGC for the previous fiscal year. So from here, we'll go looking at your overall property tax levies collected. As you can see, it's fluxed down a little bit. It is not as bad as it looks there, just from that drop from 19 to 20, which was anticipated with COVID somewhat, and we saw that last year. And then the drop to 21 really is not much there. But the good news on that side is as you look at yourself as compared to other similar sized cities as well as statewide, you're well above the collection rates of other municipalities. From there, we'll go into your the general fund expenditures. As is typical with most municipalities in the state, public safety dominates in the amount of expenditures, which includes not only the police, but also your fire and rescue, followed there by general government. And as you can see, you still have less than 10% of overall expenditures for the city goes towards debt service. From here, just kind of give you a 5-year trend. As you can see, some of the public safety dollars did drop this past year. I know that there was a lot of open positions this year. But you'll see some of the other areas, such as transportation, recreation, environmental, all are really floating right around in the same areas year over year, and the percentage per year is staying consistent. With that, we'll look at your fund balance. So the general fund balance kind of is a really broad health check to show, what do you have in the general operations of the city. As you can see, it's growing year over year over the past 5 years, up to almost 110 million this year. So the next, was that a hand? Yes, ma'am.
Yeah.
Robbie, can you go back to the slide right before? Question, what are you seeing across the state? Did you see a lot of people draw down their general fund balance as a result of COVID during 20 and 21, or are you seeing kind of the same behavior that we saw, which is basically we're using ARPA funds?
You're seeing it's kind of mixture, I want to say, because we had some cities that did not spend any ARPA funds, and they basically got it in and sat on it. So therefore, it was all deferred. And although they have the cash there to spend, it was not recognized in that year, in 21. However, there are some, if you go into the smaller municipalities, some of them are actually giving the money back and they don't want it from an ARPA funding perspective. And that's literally...
Can we have it?
Just,
oh, only kidding.
Well, I mean, it will get reallocated by the state. However, some of those smaller municipalities, it just doesn't make sense for them to take it because the administrative burden that comes with it is probably more than it's worth to them. But in similar sized cities, we're seeing about most of the time, I mean, I would say it's 50-50 whether or not general fund's increasing or decreasing depending on how that money was used. So hopefully that answers your question.
And I
Thank
was
you.
just going to add, Robbie, I think in conversations I had with some similar sized cities, I think a lot of us really approached the budget for fiscal year 21 in a really conservative fashion. Because if you all remember, we were working on that budget when COVID hit. And I think a lot of us really had no idea where sales taxes were headed, where a lot of our revenues were headed. So we budgeted conservatively on the revenue side, and then we're pleasantly surprised by how well we did do in terms of sales taxes. And then we also were conservative on the expenditure side and held positions vacant. A lot of cities deferred merit and salary increases for employees and those kinds of things. So I think, like Robbie was saying, there's kind of differences across the state, but I think for the most part, I think a lot of cities did perform better than anticipated. And I think there's another hand raised, Robbie.
Scott, what's your question?
Yes, thank you, Gwen. The next slide, you have it, the fund balance broken down by areas. Are we seeing a growth in unassigned from year to year?
You know, I haven't actually looked from the growth from the overall unassigned, but I will point this out. As the local government commission, which we'll see in a later slide when we go into the performance indicators, as the local government commission calculates it, your available fund balance is actually increasing year over year. So one of the things about the assigned versus unassigned is it's really a metric of how the management and the city manager and Tony and they all get together and say, hey, how are we going to look at this from an assignment perspective? So you can assign things, obviously, at the management level, whereas your committed, restricted, and non-spendable items are the ones that are much more restrictive in what you can spend that money on from an operational perspective. So as you look at this slide here, you look down in that whole, not only the 18.1 million, which I believe I calculated to be right around 17% of the fund balance, which meets your unassigned fund balance policy in place for the city. But if you look, there's an additional, almost $44 million in assigned that's really can be discretionarily moved by management from one category to the other. So it's those committed, restricted, and non-spendable items that can't be moved. And to go ahead and get into that stabilization by state statute, Scott, I'm sure as you know, that particular calculation is a very conservative measure of what your fund balance is and what's restricted there. They're just making sure that you're not appropriating cash you don't have for the most part. So,
Robbie, remind me and maybe the rest of the committee of what that stabilization by state statute means. Is that cash that they just require that we set aside?
So the stabilization by state statute is part of General Statute number 159 in the budget. It's a budget rule that basically you can't appropriate more funds than you have on hand, less current liabilities. So that's the simple way to look at it. So if you have a bunch of receivables, they don't count in that situation. So they just sort of get taken out. It's really that cash number is what they're looking at, is what you have available. And for any fund balance that's really related to a receivable or a non-cash item, they're saying that's restricted by statute because you can't spend that money. It's not available to you right now. So, and this calculation is actually the local government commission provides basically a template to calculate this based on the numbers that show up in the financial statements. So, And it is the first thing that they will do when they look at your when they look at your financial statements. They will pull out the general fund and they will punch the numbers in their calculator and make sure that that comes out. And they used to not do that. Well, they used to do it that way, but I will say also the data input form that we are required to submit also shows that calculation now. So, any other questions on fund balance in there?
Sandra, you're on mute.
Hi, Robbie. Yeah, you were talking about the stabilization, but the requirement there. Now, what happens? I see, like you said, it doesn't include the note receivables. But what happens when those receivables actually come in and post? Can it affect that stabilization?
Certainly. Well, it becomes cash.
Yes.
So once it's cash, it is released from that particular restriction. And really, this is a calculation that it really only happens at year end. This is not something that's really monitored throughout the year.
Okay.
But it's just saying that in your fund balance that you have out there, you really can't appropriate this money out because you haven't received it yet. But as money comes in, if you were looking at it on a day-to-day basis, if say you got another $100,000 in your receivable came in today, tomorrow that calculation would be $100,000 lower.
Okay.
Mm-hmm. And just to clarify the notes receivable real quick, those are related to the long-term CDBG home notes that are out there for revitalization and that sort of thing. So, was there another question? All right. Sounds good. So from here, move on to our compliance results. In addition to reporting our opinion on the financial statements as to whether or not they're in accordance with GAAP, in accordance with the government auditing standards or the Yellow Book, we're also required to issue a report on your compliance with laws, regulations, grants, contracts, as well as report any fraud, waste, abuse, significant deficiencies in internal control, or material weaknesses in internal control over the financial statement reporting process that we may notice during the course of our audit. Also, in accordance with the Uniform Guidance and the State Single Audit Implementation Act, we are to report on the fair presentation of the schedule of expenditures of federal and state awards, as well as report any significant deficiencies or in material weaknesses in internal control over compliance, as well as our opinion on your compliance with the Uniform Guidance and State Single Audit Implementation Act for major programs identified. So again, those two sections are incomplete simply because the ARPA supplement was not received until yesterday. So with that, I'll just kind of go over the different types of control deficiencies. So the first one that we have here, the material weakness, is the most severe or most significant one. This is a deficiency or combination of deficiencies that have the possibility to allow a material misstatement in the financial statements to pass through undetected. So then we have from there, while not as severe as a material weakness, you have a significant deficiency. This is not one that either has or has caused a material misstatement, but it does warrant attention by those charged with governance, which would be the committee here as well as council. And then the last and lowest level of deficiency that we have is just a control deficiency. These items typically don't result in any sort of significant adjustments or anything of that nature. These are typically reported to management in a separate management letter and not included as part of the financial reporting package. So this year, as I mentioned before, we did have one material weakness in internal control, and it's related to the year-end closeout. This was a repeat from last year, but I do want to point out a few things. During the course of this last year, obviously we were performing or we were presenting this in late March last year or early April, I believe, and the information was not flowing nearly as freely as it is now. We have seen significant improvements. However, we did still have one adjustment that was material by itself at year end related to the shutter venue operators grant. And then several other year end adjustment items, while not individually significant, when you put them all together, coupled with the material one that we did find, you had a material weakness related to those year end closeout items. I will say that in the response to the finding, Tony and Becky, it really that's in the financial statements, the corrective action plan. The solution to this issue seems like it's being handled, and it's just now a function of time. So what I mean by that is, you created the new assistant finance officer position. Becky entered that position in, I believe, late July or early August. So by having someone in that position throughout the course of the year, as well as having the controller position filled for the entire year, we saw so much improvement this year that we don't foresee there being issues with this type of thing next year. It just takes time. You can't, as they say, you can't build Rome in a day. You can't come in and correct a large issue very, very quickly. Well, you can. This has been very quickly, but it's not going to be at a one-time fell swoop. So we have seen significant improvement as we went through. But other than that, we did not have any other findings as it relates to material weaknesses or significant deficiencies in internal control. Any questions here?
So this is Gwen. So back in the dark ages, I was a CPA. So basically, if I'm hearing you correctly, if there's an audit adjustment that is material, it will result in a material weakness.
Correct.
Basically, right?
That's,
okay.
Yes, ma'am. Because the definition of the material weakness is that it has the potential to or has caused a material misstatement. And during the course of the audit, if we found an adjustment that's greater than a materiality threshold, then it's really hard to say that was not be a material weakness if that passed through.
Right. So it's basically if there was if an error occurred and your system didn't find it before the auditor found it, then it will result in a material weakness.
Yes, ma'am.
Typically. Okay. Thank you.
Very, very rare exceptions to that. If, say, for example, it's in something that we know that it's still being worked on and they're providing us information, but if it's been presented to us as final and then we locate an error in it, then that's when the material weakness gets issued.
Okay. Andrew, do you have a question?
I do. Hey, Robbie. How does Asheville's internal audit department size compare with other like-sized government entities?
So the internal audit, it really at the city is one person. I would say in the other clients that we have that are similar sized, some are 2 or 3. I think the largest is 4 people. As cities grow, you'll see sometimes the internal audit department grow proportionately. Other times it's better to look at it, and this is an internal decision. Does it make more sense for that internal audit department to be outsourced and have somebody in-house to really help out, do a lot of things, and then reach out to expertise elsewhere to help get through those internal audit pieces. I will say that if you're thinking, but from an internal audit perspective, so there are instances where these types of things would be found by internal audit, but most of the time internal audit is typically focused on performance audits or risk, other areas outside of just the general financial statement presentation. So we do see there are some things that are related to what we would do to the external audit, and we utilize any audit reports from internal audit during our risk assessment procedures. But when it comes to, are they looking at the same things we are? Typically the answer to that is no. And there's a lot more performance-based items and compliance-based items with internal policies and procedures versus the presentation of the financial statements and that sort of thing. So.
All right, thank you.
Yes, sir.
Scott?
Thank you, Gwen. Robbie, when we're looking at these audit adjustments, are we saying that they're material in the totality of the city's financial statements, or they're material in respect to various funds that are in the financial statements of the city?
So the shutter venue operators grant was individually material to its fund. That one in and of itself. The others were not material to the funds that they were in, but when you look at them in aggregate, not only from a quantitative, but just more of a qualitative piece, coupled with the one that was already identified as individually material, it made sense. It was the same control in that year-end review and year-end closeout process is the control was causing the issues for all of those items. So it's really one control that's failing versus multiple controls all across different things to look at. So that's why we coupled everything into one presentation. So any other questions there? All righty. Again, we're required to look at prior year findings. We did repeat finding 2020-001 as finding 2021-001. Again, still significant improvements have been made. I cannot stress that enough. But because of that one item for sure, that was material in and of itself, we are required by standards to issue that material weakness. So moving on to the uniform guidance testing and the State Single Audit Implementation Act testing. These are just a listing of the programs that we identified as major programs this year, which include the Coronavirus Relief Fund or the CARES Act funding, the federal transit formula grants, and then as well as the Coronavirus State and Local Fiscal Recovery, and that's the ARPA program. That we just were able to get the information on what it is we were supposed to test your compliance with yesterday. So then the last piece, the state program there, the non-state system street aid allocation or the PAL bill, we have finished the testing there. We don't see any issues at this point with any of the other three programs outside the ARPA funds, but again, until we get in there and really dig in on what they want us to do on the ARPA funds, we can't really render an opinion in accordance with the uniform guidance. So after which here, so in addition to the report in the PDF, I believe you should have received our AUC 260 or Auditor's Communication Letter. These are required communications by standard that we provide to those charged with governance. So I'm not going to go through each one of these individually, but it sort of outlines what our responsibilities are related to the audit. When we did our preliminary testing, then your accounting, if we had any issues related to accounting policies, which we did not. One item of note is that the city did implement GASB statement number 84 this year. This is related to fiduciary activities. So what used to be your OPEB trust funds separately stated, and then your agency funds, they now roll into what's agency funds have gone away and have really become a custodial fund. And now they go on the face of what's called the statement of fiduciary net position. You have a statement of activities and that fiduciary, a statement of fiduciary activities. So it's just a little bit different presentation, but overall, not not a whole lot of change in the the operations of those funds. So. With that, we didn't have any significant or unusual transactions that we noted during the course of the audit this year. We agree with management's judgments on estimates, which in your letter there is attachment that shows all of the significant estimates in the financial statements, the method at which they were estimated, and then the procedures that we performed to show whether or not how we got comfortable with whether or not they were in accordance with GAAP and were reasonable. Also in that communication, you have our any audit adjustments we had any uncorrected misstatements. The uncorrected misstatements that you have shown are really residuals from the previous year. These are, if there was an uncorrected misstatement in the prior year, in the end of this current year, it would be a reversing item. So it may have an effect from an activity perspective, but would not when it comes to fund balance or net position at the end of the year. So we did have some of those that just sort of carried forward from last year, but nothing new in the current year. We didn't have any disagreements with management, except for maybe what basketball team we like. But in any case, we're not aware of any consultations with other auditors, and we didn't have any significant issues from the audit outside of what we've already discussed with the material weakness. We didn't have any difficulties this year performing the audit. Fully staffed, and everyone willing and ready and able to help us, and we really do appreciate all the work that Tony, Becky, and their team puts in. Because I'm sure Scott is well aware in his position where he is, auditors are not, we ask for a lot, and there's a lot of information that we need. There's a lot of documentation that we need to look at. And when we're sitting there in the conference room and we come knocking on your door every 10 minutes, it can get to be annoying. And it's not just the week or two that we're there, it's over the course of months. So I do want to say thank you again to Tony and Becky and your team there for really stepping out and helping us out and getting this done in a timely fashion. So so we have this other item here that says we will separately communicating deficiencies, internal control over financial reporting in accordance with the uniform guidance, which again, we have not completed that piece yet. And then also in your letter, you'll get any management letters, any letters that were issued between us and management. You will have a copy of those in that letter. So next, for financial performance indicators. So the Local Government Commission decided that they were going to title what we were supposed to provide to our clients the performance indicators of concern. So that was supposed to be the title, and of course, that doesn't mean that you have performance indicators of concern. But what happens is when we put the information into the data input form that's required to be submitted with the financial statements, these are the items that kick up automatically, and if they are red, then you have an issue. And this is what this is the first one here. It's related to fund balance available. If you remember what I was saying earlier, Scott, it's going up in accordance with the LGC's calculation. Again, good luck figuring out exactly how they're calculating that off the data input, but it is increasing according to what they're saying, which you are doing better than your average of similar units. So as well as their minimum threshold, which is 25%. Quick ratio for water and sewer. Again, greater than 1. As you know, last year the Water and Sewer Fund had the issue related to the fees that had to be returned, a couple $1 million, and I think the last payment for that was this past year, so that results in some of that big drop from 19 to 20, as well as into 21. The next thing is kind of talking about your water sewer fund, just your net operating income, if it's greater than 0. I mean, they're pretty low bars. I mean, if you pass below some of these, you're not doing that great, that's for sure. Then your availability and unrestricted cash to service the debt. Audit reports submitted within 5 months plus a day, which was submitted by December 1st. I want to stop right there too and just state that December 1st was not, oh my goodness, this is finally when we got it out. Due to the new requirement that auditors present to the city council in an open forum within 45 days of receipt of the report by the LGC, we decided to try to make that as long as we could, given that we were not sure at the time when the ARPA supplement was going to come out, as to make that only 1 presentation versus 2. So it was sort of, let's wait to the last second and see if we can, and that way we have as much time as possible to present to City Council. So the next one here is budgeted levy for the general fund is greater than 3%. This is kind of a misnomer. It's bad if it's negative. It's good. the plus 3%. This is, did you collect more than you budgeted? And so if this number shows up negative, that's where it kicks into place. It doesn't present very well here. But again, this is not. We're not able to change what's on these indicators. But just to explain it, it's if your collections are less than your budgeted amounts, not necessarily your levied amount, that's what they're concerned about. Did not have a decrease in property value. As you could see, property value staying the same. Earlier, property taxes continue to go up. Had no over expenditures budget. This is your pre-audit process. They're verifying that was there an issue related to that. You do not have anything that relates to a DEQ order, and then you're not on the assistance list at this time. There's only a few municipalities that do fall into that category. Statutory violations, didn't have any statutory violations. That would have been presented as a finding in our internal control and compliance report in accordance with government auditing standards. Did not have any debt service issues, and you don't have a landfill, so you don't have that issue. The one item that you do have a indicator, and that's that if there's any significant deficiency or material weakness in internal control reported, it automatically triggers that response. So there will it will require a response within 60 days of our presentation to City Council, which, Tony, correct me if I'm wrong, I believe is January 12th. Is that correct?
I think it's the 11th.
Either 11th or 12th. It's that week. So it's the 11th. The 11th. So other than that, we didn't have any other significant findings. So those are your performance indicators of concern as they are as described by the LGC. So again, key takeaways, financial statements were presented on time. We had an unmodified or clean opinion on the financial statements, which is the highest level assurance we can provide. We did have this, one repeat material weakness, even though but coupled with a significant improvement from the previous year. And then we will complete the Uniform Guidance and State Single Audit Act compliance reporting package here in the next, I would say the next few weeks. given that we just got that supplement yesterday. So, and with that, that concludes the presentation. So I'll be glad to answer any additional questions anyone may have.
Susan? You're on mute, Susan.
Sorry about that. Hey, Robbie, I was just wondering if the IT controls at City of Asheville are those looked at in depth, and are they on par with other municipalities of the same size?
So in the course of our audit, when we look at IT controls, we look primarily at the controls specifically related to financial reporting. We're not looking at the controls, say, for example, over the operation of the transit system or something like that. That's not really in the scope of an audit of the financial statements. We have not identified through the course of our audit any significant issues in IT controls. I will say your financial package does have a lot of controls built into it. And with that, we do obtain reports as it relates, SOC reports as it relates to financial softwares and any other, I would say, vendors that you would utilize for calculations and that sort of thing. We do obtain those to see if we can place reliance on the work that has been performed by others. At this point, we haven't done an in-depth IT audit. We've not been engaged to do that. But I would say that the package that you have is probably one of the most common we see right now in the market as it relates to municipal finance. So.
Thank you.
Mm-hmm.
Sandra?
Hi,
Mute.
Rob. Yes, hi, Robbie. Sorry. Is it possible that you could go back to the slide where we talked about those deficiencies that needed to be addressed and maybe elaborate a little bit more? So for me, on those deficiencies.
Let's see. This one here?
I thought the one where you said the Harass Center, and you were pointing out some of those areas of deficiency. I think it, okay. Yes, this is it, yes.
So what would you like me to speak to?
Well, just give me a clarification of those deficiencies and what caused them, or what, a little background.
Sure. So the Shuttered Venue Operators Grant was a grant, and Tony and Becky, I'm going to rely on you a little bit here, but I want to make sure that I'm not speaking incorrectly on any item of fact. This was a grant that was issued because of the loss of revenue at the Harris Cherokee Center, and at year end, the money came in after year end. So during that year end process where they're monitoring the cash as it comes in the door, it was related to expenses that were incurred during fiscal 21. So the money that came in was then booked as revenue for fiscal 21. However, the grant agreement for the revenue was not signed and in place until mid-July of fiscal 22. Therefore, revenue doesn't exist until that grant agreement's in place. So therefore, the matching principle that typically follows revenue and expenses couldn't follow because the grant agreement was not in place by June 30th. So that was the big one. The other items just relate to the CDBG in Section 108 was making sure that the review of those at year end for what needs to be deferred and what shouldn't be deferred. And the Elgers liability, other deferrals and expenses is all related to the local government employees retirement system year end audit adjustment, or not audit adjustment, but adjusting journal entry. And that's a little bit more complex at the city, given how they allocate some of those things amongst different funds. The 911 unearned revenue, this again related to the timing of receipt of funds. And then long-term liabilities, this was a government-wide entry. What that means is that it didn't have an effect on any fund or operations, but there were 2 payments that were made early for debt. And in accordance with modified accrual accounting standards, that doesn't constitute a debt service payment in the current year because it doesn't come due until the next year. However, it is a prepayment, which is how it was presented in the fund statements, which is appropriate. However, at the government-wide level, when you go to a full accrual, you have to mark those prepaids and take them against the liabilities, which resulted in an adjustment. I want to say it was just under $2 million on the statement of net position in the classification between prepaid and long-term debt and what was being presented. And then in compensated absences, I believe it had to do with an error in the calculation around some outstanding holiday time. Becky, correct me if I'm wrong there. I'm pretty sure that's where it came into play.
That's correct.
Yeah. So again, each one of those entries that are listed on there and the other individually insignificant, had those been by themselves, it wouldn't have made it to the point of being presented as a finding in the financial statements. But when you couple them together and then you had the one that was individually material, really it's around that year-end review of year-end journal entries. That's the control that needed to be strengthened and that did not operate effectively to catch those items at year-end, because nothing here affects operations as everything goes on. It's financial reporting at year-end.
Thank you. That was great. I greatly appreciate it.
No problem whatsoever. Any other questions?
Robbie, for the additional reviews or audits that you'll have to be doing later, will that come back to this committee, or, I mean, do you have to do it, in a meeting like this, or can you just send us a letter?
So the way I understand this from the local government commission, because of their required presentation these days, if there are no findings and we can communicate this through a communications letter in a reporting package, in an additional AUC 260 letter, just talking specifically around the single audit and the that stuff, and we can present the results in January at the city council meeting directly, and it does not require any kind of other meeting. Now, that being said, if you would like me to present those results in a committee meeting, I'm more than happy to do so.
Unless other committee members feel differently, I wouldn't need it unless there's, you find something of concern. It can just be consolidated up into the aggregate report to council.
Anything else?
Thank you, Robbie. We really appreciate it. I'm going to ask Tony to go ahead and give us a CFO update. But I guess the question or the comment I have is, I know that year-end audits are fun and games, and you're under a very tight time schedule. And this past year, we were still very understaffed. So please share with all of the finance staff and even the auditors how much we appreciate all their work, and know that there's a lot of stress here. And, you're all kind of with a little tiny smiles on your face still. And sometimes that's hard to come by. So thank you.
Yeah, well, thank you for saying that, and I just can't overemphasize the amount of work that Becky has put in over the last few months to get us to where we're at today. I've been looking at her timesheets for the last few months, and believe me, she has put in a lot of time and effort, and so we would not be where we're at today if we had not had Becky rejoin our team. So glad to have Becky back.
Welcome back, Becky.
And I know we're already 4 minutes. Oh, I'm sorry. Go ahead.
Oh, yeah. Well, so I was going to just turn it over to you for the CFO update, but you let us know if there's anything else.
Yeah, no, we're 4 minutes past time. I wanted to give you all just a quick update on the internal audit program, and I will be very brief. I think, as you all know, our internal auditor, Patricia Rosenberg, left the city in early October, and we provided a memo, Kathy Ball and I did, to the audit committee around the time of her departure to kind of outline how we were handling her duties and projects that she was working on in her absence. And so really the update for today is just to let you all know that we are moving ahead with recruiting for that position. Becky and I are actually meeting this week with our Human Resources Department to talk about getting that job announcement out on the street and beginning that recruitment. And so as we go through that process, we'll be looking at our candidates, we'll be looking at the program and potentially working to enhance the program by contracting out part of our audit program moving forward. I think Robbie kind of talked about some of the approaches that other cities use in his presentation, and we're exploring that contract piece ourselves. So unless you all have any questions, in the interest of time, I'll keep it very brief. And again, happy to answer any questions. But that's it, I think, on the audit update.
I'm sorry, I haven't gone into I know it's not called CAFR anymore, but whatever it is. There is a management response to the weakness and all, and okay, I'll dig down and just take a little look-see at that. Okay, so I'm going to go. So we didn't receive, the next item is public comment, and we did not receive any comments prior to the meeting, and I'm just going to ask staff if there's anybody in the queue to wait that would like to give public comment.
There are no callers.
Thank you, Alicia. I appreciate it. All right. Well, if there's do any of the committee members, both the Finance Committee or the Audit Committee, have any questions or anything you want to chat about? All right. Well, with that, again, really thank the staff and thank the auditors, and we appreciate this comprehensive review of this form. I suspect that you won't get quite as many questions from the full council. Just a guess. I could be wrong. Okay. So with that, I'll go ahead and adjourn the meeting. Thank you.
Thank you.